guests are Henry Harteveldt. He is the co-founder of Atmosphere Research, specializing in the airline and travel industry. He joins us from San Francisco. And a bankruptcy expert, the attorney, Sidney Levinson. He's a partner at Dewey LeBoeuf. Gentlemen, good to have you with us. Henry, I want to begin by putting to you, you started your career working at American Airlines, so a bitter day for you. Why did American Airlines go into bankruptcy today? What's different today than it was, let's say, last week or last month?
You know, they ran out of time. This is actually something that the airline, I believe, had been contemplating, and I think they just realized that hope is not a strategy. So they made a very difficult decision at a board meeting a couple of weeks ago to file. They spent the past week and a half getting their act together, and the announcement was made today.
Sid, so what happens next? You're an attorney. What's the sort of outlook for the creditors committee, the bankruptcy court, and the exclusivity that management has to put forth their own plan?
Well, initially, what will happen today is that the court will hear a number of motions so that business can continue as usual, the company can continue to operate. But in the meantime, the company's going to have an exclusive period that'll be at least 120 days, but no longer than 18 months, to put together a plan that can build the consensus of all the very divergent constituencies, the lessors of the airlines, the unions, PBGC, and a whole host of other, and the lenders, of course, of which right now there's about $10.9 billion of debt.
Henry, come in on the topic of the unions right now. The Allied Pilots Association, were they hoping for a different outcome? Aren't they supposed to have a meeting, what, December the 6th about this?
I bet they were hoping for a different outcome, and I'm sure they're sorry they didn't take the contract that was on the table, because I suspect what they get going forward won't be as sweet. There's no question American is going to seek even more productivity, more flexibility for regional jet flying, and they'll demand the ability to have a domestic code share partner.
So, Henry, what does this mean? The retirement of the MD-80 aircraft, also the 757 aircraft, and other aircraft that are not as fuel efficient as some others?
Correct. So American is going to go and renegotiate the leases on its aircraft, is focusing on the MD-80s, the 757s, and the oldest 767s. If they can't get those costs down, those planes will go. Likewise, American will renegotiate contracts for everything from airport services to reservations, even catering and baggage delivery costs. All of it is on the table right now.
Sid, you mentioned the Pension Benefit Guarantee Corporation. This is a private company, and corporations that have defined benefit plans, they pay money into this company in order to what? Ensure against being able to pay those benefits to their retirees.
That's right, and American has substantial obligations to fund those pension plans. I mean, certainly one of the big issues for a company like American that's been around as long as it has is very substantial retiree costs. There are opportunities to try to address those in bankruptcy, but it can be difficult. There are difficult standards to overcome, and of course, PBGC has all kinds of tools at its disposal to the extent that companies don't fund as required.
Henry, what's the cost structure at American Airlines versus some of their competitors? Start off with the pilots. Are they making too much money?
It's not a matter so much of making too much money. American's costs are pretty much in line with some of its key competitors and actually below some other airlines. Where American loses out is in productivity, the pension costs, as you mentioned, and the inability to have regional jets flying some marginal routes. So it's really a matter of American not only reducing costs with labor, but reducing the operating costs of the airline and also seeking to bring revenue up. That's not just a matter of raising fares, which is hard. American competes with low-cost airlines on more than 80% of its domestic routes. But it's also a matter of finding new products and services that Americans can sell to its customers.
Sid, what about Americans selling off some of their routes? Is that likely?
It's certainly, they'll be looking at every possible option to generate excess cash, particularly because of the high amount of debt they have and the fact that so much of that debt is at interest rates in excess of the very low rates that we currently see in the market. So to the extent they have those opportunities, I'm sure they'll exploit them.
Henry, what about the opportunities for competitors? Start with LUV, Southwest Airlines. Aren't they going to be able to fly from Dallas's Love Field in 2014?
That's correct. In 2014, the last restrictions of the Wright Amendment go away on Love Field, so Southwest will be able to fly anywhere from Love Field, and mostly that will be domestic, but that increases the pressure on American. United and Delta both have hubs in the New York area. That's not going to make Americans' life any easier. And they have Southwest and United with hubs in the Chicago area, which also make life difficult for the airline. The airline industry is brutally, brutally competitive. And to your last point on route sales, I'm not so sure there are too many sales really left for American to make where they wouldn't be, frankly, just taking the furniture to keep the house burning. So much international flying to Europe is now open skies, and American doesn't have a lot of access into Asia, which is controlled.
Henry Harteveldt, what about the consumer, the flying public? Are they going to be inconvenienced, and what about their frequent flyer program?
Yes, the all-important frequent flyer balance. Your Advantage miles are safe. For the near term anyway, you're okay. It will take American a few months to reevaluate the route network. So near term, you're all right, but I would expect by next summer we'll see some changes made to the schedule, the destinations, and so on, and that's when any cutbacks may start taking place in terms of smaller fleet and fewer flights.
Sid, what about the prospects that something happens unforeseen, that American does not exit the bankruptcy protection and, in fact, maybe get sold off?
I don't think that that's a likely scenario for American. I mean, given its size, given the business, and given the fact that they have made a number of changes over the past several years, it's really just a matter of being able to get the cost structure fully in line with all of its other competitors, which, of course, I mean, at least on the legacy side, have filed for bankruptcy and gotten those benefits already.
I want to thank you, gentlemen, very much. Sid Levinson joining us from Dewey LeBoeuf, also Henry Harteveldt joining us from Atmosphere Research in San Francisco.